Good morning everyone and welcome to another RF Crypto video. Today's markets have remained boring. The markets haven't really moved. 0.06% is nothing. The global crypto market cap is still standing at 1.15 trillion, moving up by about 10 billion from the previous day. It isn't much, but at least it's something. The markets are basically stagnant. The only ones we see proper movement from is Dogecoin, which is up 13%. And the rest of the market, just moving very laterally. It's a really boring day for crypto in terms of price movements, but there are some exciting news happening, and it's very important to note these down and have them in mind because they add to the narrative of the future of crypto and the future of blockchain and the future of the entire financial technology business. Looking at the price of Bitcoin, we can see here that it hasn't moved. It's been trading laterally basically. It's close to the $24,500 resistance level. However, it is trading closer to the middle of the support level of 23,000 and 24,500. We haven't seen much movement. Things have been going laterally. There hasn't been any sort of news in the market that can push the markets up or down. There hasn't been any geopolitical or social or economic news in the market that is significant for both the crypto and the usual stock market, and we see a situation where the markets are stagnant. Even if we look at the stock market, look at here, there has been only a 0.4% change, which is basically nothing, and similarly, the crypto markets have changed by a small amount. On to some news. Justin Bieber, Paris Hilton are among 19 celebrities called out for shilling NFTs. So consumer watchdog group Truth in Advertising has called out 19 celebrities for allegedly promoting non-fungible tokens without disclosing their connections to the projects. And why this is the case and why Truth in Advertising is going after the celebrities, we can't really call it going after. It's more of like making them aware of what they did and wanting them to face the repercussions for the people they have wronged. Because they have wronged people in the sense that they have shilled certain NFTs and certain tokens to their communities, their millions of followers on Twitter and Instagram, not really knowing what the projects are about. I think all they cared about was the paycheck that came out of it. A lot of these projects had no backing, a lot of these projects had no utility, and most of them, I'll dare to say 80 to 90% of them failed. And the other 5% did very badly, and the rest of the 5% did well. And it comes at a time where there has been no regulation in the market, and therefore advertising has been rampant. These projects have been advertising left, right, and center, and they see no regulations, so they do it however they see fit. They hire celebrities even though their project has no utility, but by seeing celebrities backing these projects, people trust that the project is good. You and I will trust because these are public figures who we think won't want to ruin their reputation by getting into something that has no future. But it wasn't the case. A lot of people lost money because of this, and there has been no legal repercussion for this because there are no regulations to fight it, and it's pretty sad. So among the star-studded list are sports star Floyd Mayweather and Tom Brady, music icons Eminem and Snoop Dogg, and several actresses including Gwyneth Paltrow, all of whom have been sent letters urging them to immediately disclose any material connections they have to NFT companies or brands that they have promoted. And while no real legal penalty has been attached, Tina.org has noted that it has sent letters to the celebrities involved on August 8th, so about a week ago, outlining their grievances and advising them of the potentially harmful effect shilling NFTs can have on the public, which is that they may lose the entirety of their investments. One of the group's primary concerns outlined in the letters is that the possible financial risks associated with investing in such speculative digital assets are not being disclosed, and that's what we talked about, the risk of the project going to zero, the risk of being a rug pull, and the risk of not having regulations. Tina.org previously sent letters to Justin Bieber and Reese Witherspoon, legal teams on June 10 for promoting NFTs on their social media accounts without disclosing their connections to the project. Bieber's legal team responded by denying any wrongdoing, but stating the post would be updated. So if there were no wrongdoings, then why did the post need to be changed? It is a conflict there. But I mean, it is a good step, but that's just because they were confronted. If they weren't confronted, I'm sure they wouldn't do it. So there is some dodgy practices going around the promotion of these NFTs, and celebrities got involved in it. Maybe they didn't know what the projects were about. Maybe they were duped into advertising, or maybe they were enticed by the money. But it's still wrong. Also, shilling could violate FTC guidelines. So the group, Tina, links to the FTC website, which outlines that influencers must disclose any material connections to brands they're endorsing and make the disclosures clear, unambiguous, conspicuous, and within the endorsement. So far, there has not been a publicized case of celebrities facing legal penalties for shilling NFTs or crypto. And this may stem from the fact that celebrities have a lot of influence and lawmakers don't want to really piss them off because they don't see it as a big problem. However, I think when a framework for crypto and NFTs come into place and it becomes law, a lot of these celebrities are going to face scrutiny on the hands of the FTC, and a lot of investors who invest because of the shilling will sue them eventually. I think it's just a matter of time before these people face legal repercussions due to the shilling that they had done. Also, don't listen to celebrities, said the United States Securities and Exchange Commission in 2017. They had warned investors about celebrity-backed initial coin offerings, and they said that celebrities who endorse an investment often do not have sufficient expertise to ensure that the investment is appropriate and in compliance with federal security laws. So this warning has been there since 2017. And they have warned that, celebrities, they just want the money. They don't really understand what's going on. For them, it's just another advertising gig. And they were right. A lot of people have lost money because of celebrity shilling, which is very sad. On other news, Federal Reserve releases new guidelines for crypto banks. So the Fed released formal guidelines yesterday to oversee the process by which institutions offering new types of financial products or with novel charters could be granted so-called master accounts, which is a key financial status that allows for direct payments with and access to the Fed. All federally chartered banks possessed a master account. And it's very close to the point where crypto companies and NFT companies and digital asset companies can possess a master account. It's just a matter of making it into law. Custodia, a crypto bank founded by Morgan Stanley Managing Director Caitlin Long, sued the Fed in June, citing a 19-month delay in Fed's processing of the bank's application for a master account. The Fed's application paperwork for a master account cites a typical turnaround time of 5 to 7 business days. 19 months is a lot more than 5 to 7 days, but at the same time, I understand where the Fed are coming from. There is no real regulation or framework to deal with crypto banks, so they were delaying the application of the master account for as long as possible. So the new guidelines provides a consistent and transparent process to evaluate requests for Federal Reserve accounts and access to payment services in order to support a safe, inclusive, and innovative payment system. So there will be 3 tiers where the application's risk level will be assessed, and Tier 3 includes institutions that are neither federally insured nor subject to prudent supervision, but rather subject to a supervisory or regulatory framework that is substantially different from and possibly weaker than federally insured institutions. So, crypto banks would fall into Tier 3 because they're not federally insured and the regulation is weaker than for banks, for example. So, hopefully, in the near future, these crypto banks will be able to apply for a Tier 3, at least a Tier 3 master account with the Fed. So Australian Securities Exchange takes step towards tokenized asset trading. Companies on the Australian Securities Exchange, or the ASX, could be able to trade tokenized bonds, equities, funds, or carbon credits after a successful proof of concept trial led by the digital asset investment platform ZeroCap. So I think that the crypto space and the digital asset space in Australia is quite advanced compared to, for example, the US, because now they already successfully tested tokenized assets such as tokenized bonds, equities, funds, or carbon credits. And it's getting a lot of traction from the institutional sphere, and a lot of companies want to start trading in the tokenized asset space. So ZeroCap could be looking to officially launch as tokenization and trading services via Symphony, which is their tokenized asset platform to institutions in the near future, as it has just cleared the necessary steps for legal approval. Also, Makal also highlighted that with the ASX being a reputable source to host digital asset trading, doing so would likely dampen institutional concern over counterparty risk relating to the crypto sector, which makes sense. If the trading takes place within a reputable source, then, there is no worry, because they will make sure, the ASX will make sure that these tokenized assets are properly backed. Also, just a side note, ZeroCap recently had a hand in a tokenized carbon credit transaction in late June, with the firm providing market-making services and liquidity for an exchange between a major Australian family office, Victor's Morgan Group, and Beta Carbon, a blockchain-based carbon trading platform. The deal was also facilitated via ADC, a fully Australian dollar collateralized stablecoin developed by Big Four banks, Australian bank ANZ. So now we know that it is pretty safe to deal with stablecoins in Australia, because this specific one is backed by a Big Four bank in Australia, and the risk of it failing or depegging is close to zero. So Australia is pretty advanced in terms of its digital asset space, and the whole world could look at Australia for inspiration and implement similar policies. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.